First of all, I wanted to apologize for this little delay. I have a little problem, but now we are here. Welcome, first of all. My name is Petercam. I'm a marketing board member at Capitant Brussels, and tonight you have attended a wealth management event. The program of this evening will be a short introduction, and then I will introduce to you Capitant, Mr. Colmant, which is the CEO of Degroof Petercam. We'll then tell you about wealth management, and unfortunately, he will have to leave before in a few half an hour because he have another meeting. And right after that, Mr. Léon Kirch, who is the CEO of European Capital Partners, and Mr. Sandro Ardizzone, who is the co-CEO of European Capital Partners, will also tell you about wealth management, asset management, and our three panelists will also tell you about the Corona crisis. After that, we will proceed to question and answer, and eventually we will close the event. So first of all, what is Capitant? Capitant is the largest student finance organization in Brussels. We are operating in 5 different cities, including Brussels. We are targeting students that are passionate about finance and trying to pursue a career in the field. Together with financial institutions like Degroof Petercam or European Capital Partners today, we organize different events. They can be conferences, workshop, investment game, or M&A cases competition. Being Capitant provides our member both valuable learning and networking opportunity. So in resume, you can have access to all of this for only €5. And when you pay this €5, you have a goodie bags. You are prioritized to access our events. You also receive financial internship announcement and certificates. You can become a member of Capitant in our Facebook page just by signing up or in our website. So without waiting, Mr. Colmant, if you're ready, they are all yours.
Well, thank you to welcome me tonight in this nice setting. I already made the presentation to Capitant Leuven a few weeks ago, so I'm glad to see we have something in Brussels. So let me share with you some thought about the wealth management industry. We are living through very special times. It's an industry that changes a lot. Because regulation is all over, because financial markets after 10 years of growth may become heavily volatile, because also the corporate social responsibility it becomes a key feature in the industry. So at Bank Degroof, we are changing the business case towards, I would say, more digitalization, more products that are featuring this corporate social responsibility. We are also changing the business case towards more services because ultimately we know that asset management will become more and more automatized by robots, by parties that have, super calculator capacities, and so the industry is changing. But as a CEO of Bank Degroof Petercam, I'm quite confident that we will go through that. Of course, we had a critical mass. We manage directly more than 41 billion in AUM, which is, I would say, significant. But also because we have a fund management industry with us, so we can support the client needs with services on the private banking side, and also with a fund management industry that is able to produce the best products, I think, that you can find in Belgium, and this without being nasty naughty to any party. But the business case is changing. To me, the biggest surprise that I've been through since a year ago when I got appointed as a CEO was the change in regulation. We see that everywhere. It was MiFID, today AML, anti-money laundering is the name of the game. And we see that we are more and more heavily regulated. And that's a trend of history because, we are going to fall into a low growing economy. We know that the capital gains of capital have increased significantly, that the labor productivity has not been rewarded by salary increases. And so more and more there will be political pressure to tax capital, to know exactly what is the wealth of anybody. So the transparency that people know in the US since at least 30 years ago is appearing in our economy. So new business case, new rules of the game, but the basics remain the same. Being able to serve a client in a physical way, plus a good product. So this is in a nutshell what I'm going through in Belgium today. But you are going to ask questions, right?
Yes. So now Mr. Colmant is done. To all our participants, if you have questions, you can ask.
But maybe I would like to add something, because we've been through this COVID crisis. I tell you a strange story, because in January I was listening to France Inter, it's a French radio. I wake up quite early in the morning, so I think it was the news at 6 o'clock in the morning, and I heard, I was in my shower, that some kind of flu was appearing in China. And I thought to myself, having been many times in China, this is strange to hear such a news, because it reminds me the first time I heard something about the H1N1 flu in 2010. I also read somewhere, 2 lines in a newspaper, and I thought to myself, having the same intuition, this will spread all over the world. By the way, my own daughter, got the H1N1 in 2010. She was 10 at the time. She was so I immediately, I was still almost in my shower. I ordered on the Amazon masks and gel, and then I tried to convince at my company that we should do the same. And I had a hard time convincing people, because they thought I was quite pessimistic. But usually I have a good intuition for these kind of issues. And we were able at the bank to order gel, mask way before the companies. We decided to order way before the lockdown 300 more PCs, laptops, in order to allow people to work on a remote basis. And we could achieve that, which was good news. And so the company has worked, I would say, fine since the month of March. I think that we will celebrate 1 year of remote working in a few months. But the lessons I've learned are multiple. First, working remotely means working and managing a company in a crisis mode all the time. The biggest challenge is to convince people to stay, I would say, tuned with the company, to stay on board, not to lose hope, not to lose courage, not to lose connections. And it's a management exercise, because even if all the tools are there, the morale of the company is very important. And so what I've been doing since the month of March, I stopped during the summertime, was to send a daily email to all the people in the company to reward and to thank them, because every day they accept to work remote. It's an effort to them. Huh? They prefer to be in the office. They are fed up, being with the kids and sometimes their parents, in the same room. So it was a management exercise, and to me it's a good exercise to go through when you run a company. Voilà, in a nutshell.
Okay, thank you very much, Mr. Colmant. So to our participant, if you have any question, just raise your hand and I will give you the opportunity to ask your question before we let Mr. Colmant go. So
I don't know how many people are listening to this thing.
There are actually 77 so far. Javon ask a question first. I'm giving you the mic.
Hi, thank you. My only question, I'm Javon from KU Leuven. My only question is that you mentioned that in January you have this intuition and you managed to order masks early in time for your company. What other strategies did you manage to convince the Degroof Petercam to employ in order to hedge against this kind of early risk? early on?
I had to give an order because people were not convinced. So there were, when a crisis happens, you cannot repeat the pattern of the past. Because if you keep on repeating things that you have done in the past, you cannot have the vision to adjust to a new reality. So after 2 or 3 weeks, I realized that the gel was not ordered, that nothing had changed. So I gave the military order to buy this gel and these masks. And so I could convince some people that they should be that way. Sometimes as a manager, you must give orders without being disputed. And so, but of course, I could have made a mistake. But I thought to myself, it's better to be on the safe side. And also, I thought, in case this pandemic surges, and by the way, thanks to that, we had no people seriously affected by the COVID in the whole company. I thought to myself, if we do not do something in a rigorous way, we could even be sued by our people because we couldn't be prudent enough to protect them and their families. So that's why I was quite pressing on these decisions. Yes.
Thank you.
You're welcome.
Okay. So there's another question. Moit, sorry, I don't want to mispronounce your name. Go ahead.
You should unmute.
Yeah, I unmuted.
Thank you. Am I audible now?
Yep.
Okay. So first of all, good evening, Professor. I had a small question. It was quite personal, actually, and it was related to the career path that I was planning to choose. So I was really undecided between career in corporate finance or wealth management. So I mean, I'm still at the crossroads here. So I would just maybe like some insight from you on what the two different career paths need, and just a few differences, if you could provide.
Both are good ways to go ahead, but if I were in your shoes, I wouldn't make plans that would be with an horizon of more than 2 or 3 years. What matters at your age is to learn the ropes. And by learning the ropes, I mean what I mean, to learn how the profession, the business life works. And the most important thing is to work for a company that deserves you. In other words, you need to work for a good manager. You need to make sure you learn something. If you work at whatever you learn, would it be wealth management or corporate finance, because you are not expected to become a specialist before the age of 40. Before that, you have to accumulate multiple experiences. And by the way, I followed myself one rule in my whole career path, and I changed job many times. The day I wouldn't respect my boss, and the day I would lose my time, I would immediately leave the company. Because, we have one life. The only capital we have is our health and our time. Health can be repaired. I myself, I'm 60, I have multiple, small things, and you see your body functioning less efficiently than when you're young. But the one thing that will never come back is your time on earth. You can believe, there was a paradise somewhere. That's another story. It depends on everybody's view. But I would say that if you start accepting losing your time in a company, not learning something, you are doomed. You are dead. So this is the only, I would say, discipline I would impose to myself. And it's tough because sometimes, you have to give up comfort. And sometimes it happened to me 2 times, 3 times, you are without a job and you start applying and it's uncomfortable. But eventually, somebody who is serious, somebody who has character, as we say in French, definitely will make up his own way.
Thank you, Mr. Colmant.
So I have no advice to give to you except working for, whether you work in wealth management or in corporate finance, please do that in a good company. A company that is reputable, that has a good reputation, where you know that people rely on you, count on you, and where you can count on the people in the company.
Okay, thank you, Professor.
Welcome.
So, any other questions from our participant? Yes, Amin, go ahead.
Good evening, Dr. Colmant. I'm from Solvay Brussels schools, and I have one question. You said like it's
which school are you from? Which school are you from?
Solvay. Yeah, I have like my master thesis with you. So I have just one question. It's like you said like it's hard, you know, to manage people because they work remotely, and I was just wondering if you think that it can be a long-term solution, or it will be better after the crisis to come back to the office, or maybe to do a mix between them.
It's a difficult question. What I do feel is that, no, let me put it this way. I feel the mood is changing. The mood of people is less optimistic than before, because originally they thought, you know, we will overcome that. We are almost 9 months after the surge. And I see the mood is changing. I do think that working remote, like we do today, like we do right now, you know, is fine to some extent, but we need physical contact. And I hope that people will come back to the office in a good mood. You know, I went to the office every day since the start of the crisis, well protected. And by the way, I had the COVID myself. I don't know where I got that. But anyway, I was alone in the building. I was alone. I live alone, so I couldn't contaminate anybody, and I've not contaminated anybody. But I hope the people will come back to the office because you need physical behavior. You need physical contact. You need to behave yourself. My fear is that once you do not confront yourself with people in the business life, you tend to think that your own behavior is the right one, whereas we are self-controlled by the other ones. In other words, when you come to the office, you know that you cannot come naked, you cannot come, you know, with only a short pant. You know that you have to shave, to be well dressed, to behave, to listen to people. If you start working on your own, alone at home all the time, eventually your own behavior will be affected, and I do not think it's good. So I hope that people will come back to the office. We do not want working remote to become a rule. Our idea, when the crisis will be somewhat over, that people will be allowed to work 2 days per week remote, but we need them 3 days in the office, and I think we'll keep them.
Great, thank you for the answer.
But the most important lesson, is not to work remote. You see that with all the people, when they are alone, they tend to give too much importance to small things and not enough importance to big things, because there is nobody to discuss with. And loneliness is catastrophic for people, because we need human contact. We need friends, we need love, we need to have women, to sleep with women. We need all these things to discuss with people. And working alone, remote, to me, on the long term basis, is not good at all.
Okay, so I think someone else have a question. Muhammad, go ahead.
Good evening, Professor. You just said that early on in career you should not lay too much emphasis on the industry you work in, but your focus should be the people or the company you're working for. Are bosses your good mentors? Is the company giving you responsibility in doing tasks? But how do we determine the company we're going to will give us these things? Because we don't have any experience. We just graduated from university. How do we, what's the best way to determine whether the company we're going to is a good fit for us?
No, that's a good question. And to some extent, your first choice may be a coincidence choice. What I would say is that, when I started working long ago, it was 36 years ago, there was no website, no nothing. So only a reputation was there. And I started to work for a company called Ardizzone that became Deloitte. We went bankrupt in some 20 years ago or something. I would say today, I would tell you honestly that I would look up the websites, look up what the career path of the people are. And if you want to apply for a company, try to locate somebody that you know, a former student or somebody older than you who works there so that you can ask questions. That's the best way. Today, there are, it's easier to know if a company is good or bad to work for because there are also ratings of the good companies to work for. It's easier, but I would spend time. I really would spend time trying to know the company. But the most important thing is that when you're there, after one day, you will feel if you are the right place or not. I tell you, one day, even not one day. No, you know what? The first minute. It's one. Sorry to make a parallel. When you date a woman, you know from the first second if you are going to spend 3 years with her or a few hours. You know that from the start. And so I would say that also, in order to avoid to make a mistake, a good thing would be to discuss with the people from HR before signing off your contract. Discuss with these people. Do they have time for you? Do they are ready to explain to you how it works? And if you feel that they are treating you with cynicism, don't go there. And if you feel that they are listening to you, that they show empathy, that they really care for you, and that they have a path for you, it shouldn't last more than 2 or 3 years, as I told you. But if there's something tangible, then you may go for that.
Thank you very much, Professor. Really appreciate your words.
I have unfortunately to leave you because I have a deal tonight, so it's coming.
Okay, so
thank you, and you guys take care. Okay. So
yeah, okay,
I'm sorry I have to leave you, but it's like that. Okay. So you guys take care. Okay.
Okay. Bye bye.
Bye bye. You take care. Bye bye.
Take care. So now we are with 2 left guests, which are Mr. Léon Kirch and Mr. Ardizzone. They will also tell you about wealth management, asset management, and also the impact of the Corona crisis. I think now you can share your screen. Yes.
I do now. 1 sec. Slideshow up.
Okay.
Is that okay? Do you see it full screen now? Or
yes.
No.
Yes, I can see. No, it's not full screen.
Okay, then I change. 1 sec. Up. Here we go. You see it's better.
Yeah, now it's better. Fantastic. Go ahead.
Okay. But thanks a lot for having us. So I'm here tonight. So my name is Léon Kirch. I'm here tonight with Sandro Ardizzone, my co-CEO. I'm actually zooming in from my home office here in Luxembourg. Sandro, I believe today is in his home office.
Right.
Tonight next to Brussels. And well, actually, I listened very carefully to what Mr. Colmant was telling us, and as we were a little short on time, we did not comment in the meantime. I would, however, in addition to what was said before, I would definitely give you one, not advice, but one personal comment. I think the most important professional choice you do initially is the one which is, and the best one, is guided by what is your passion. And I think if you need to choose in finance what you want to do, I think there are many very talented competitors out there who want also to achieve a lot of things, but you are not probably if you are not following your passion, it will be a very hard professional journey over several decades. So I would definitely recommend you to listen a little bit to your heart. For example, if you, and I'm not talking about women now, I think if you want wealth management, you need probably to be very much inclined towards client contacts, towards being able to discuss with clients, explain to clients. That's not everybody's best job. If you want to become a portfolio manager or financial analyst, you probably like to spend a lot of time analyzing, going through financial accounts, etc. So I think your choice should be first guided by this. And then about the ratings of the companies you look at. Of course, there's a reputation out in the market of the different institutions. However, I would also think that you should stay open also to all the new developments, and probably the most dynamic actors in the sector are quite often smaller companies which are not rated or which are not very well known. Sandro and myself, we recently had a conference call with a company active in artificial intelligence, applying it to the financial world. PhDs, very intelligent people, and in a very fascinating subject, which definitely will be able to offer solutions over time that will help, and it's all startups. So, so I believe there is this passion element to it, which makes you get up in the morning and go to your job. But that was just my first introduction. So tonight we wanted to show you a little bit more about who we are and at European Capital Partners. And I think it's quite an interesting choice because compared to the first presentation, we are a much less established player, a much smaller player. Mr. Colmant was talking about 41 billion assets under management. We are below 1 billion in assets under management. We are quite small firm, 13 people. And I wanted to explain a little bit more in detail who we are, and then also talk about wealth management and on COVID, and how COVID disrupted or impaired or maybe improved our business. So I'm trying to go to the next slide. So actually, European Capital Partners is a Luxembourgish-based business, was initially founded in 2010 by Luxembourgish entrepreneurs. Luxembourgish entrepreneurs, one of them you may know, his name is Patrick Hansen, who has founded or developed a company called Lux Aviation. He built it up to become the second largest private jet operator in the world. He's the chairman of our company. He's also very active in numerous private equity activities, and these entrepreneurs, they needed a regulated arm. They needed a so-called management company, a shell, to host their funds, to host their clients, and to face the regulated world, financial world. And that's European Capital Partners. I joined in 2014 after a career in different larger institutions. So I started my career actually in wealth management for a Luxembourgish bank, and rapidly moved to asset management, and then worked as a fund manager at Nordea for managing European equity funds for a dozen years. And I came in and became a shareholder of this business in order to develop the listed security side of the business. So if you think about European Capital Partners, in terms of regulation, we are almost a bank, but not yet a bank. The only thing we cannot do compared to a bank is giving credit, loans. So we can manage funds, we can do wealth management, we can do all these regulated services, or most of them, except giving loans. So we are not a bank, so we will not have a bank run at one stage, but on the other hand, we are, it gives us, I believe, a very interesting regulated tool to do our business activity. I think in the life of smaller companies, there are sometimes very important decisions. And we took one at the beginning of this year to open our capital of the company and to do a partnership with a Belgium-based company called Whitestone Partners. Sandro is representing also Whitestone, and he's our co-CEO. Maybe you would want to say a couple of words about Whitestone, Sandro.
Yes, thank you, Léon. Good evening, everybody. I'm very happy to be here with you. I want to thank Briac for this invitation tonight. And I can say that the membership is not so expensive, so it's a good thing, Briac.
Of course, you can become a member if you want.
It's value for money, it's good. So just to sum up my professional career, so I'm 44. I started my career, I first was at Solvay Business School. I ended my courses in 99. Léon came also from Solvay too. Afterwards, I began my career working for Arthur Andersen during 3 years, like senior auditor. Afterwards, I joined NG Group in the controlling division for Southwest Europe subsidiaries. I stayed there during 2 years. And afterwards, I joined Compagnie Nationale à Portefeuille, which is the holding, was previously listed on the stock market in Brussels, the Compagnie Nationale à Portefeuille, CNP or NPM. And so it is always a family holding company with listed assets on the balance sheet, but also private equity. I was there like head of financial markets and treasury. I worked there for 10 years. It was a very interesting and very rich experience. I worked for Gilles Samin and Albert Frère. And after the back to private of the company in 1911, I decided with Frédéric Pouchin, who is my current associate in Whitestone, to create Whitestone to launch a small asset manager player. So we developed Whitestone by ourselves till 50 million euro around. And at the moment, for us, it was critical to make a new strategic development because, as Léon explained, we are living, and also Bruno Colmant in the beginning of this presentation, we are living in a more and more regulated sector. So regulation is a challenge. I think it's an opportunity too we have to tackle, but it's also a cost. So we decided to convince, and Léon was open also to make something together. And so last year, in December, we found an agreement to join our business with the business of ECP and to make it growing story with ECP.
And we have in ECP a Swiss partner. Will not. He's actually the biggest wealth manager in the Tessin, the Italian part of Switzerland, with offices in Lugano, in Geneva, but also in Zurich. Well, if you take now these three companies together, we manage around 3.2 billion euros, but that's still far away from the 41 billion Mr. Colmant was mentioning. So what are we doing? We have actually 3 lines of business. we have the first line of business is wealth management. I think the difference with the bigger houses we have is simply that for us as a smaller firm, every client is important. So we don't have, well, I'm not saying that not every client is important for bigger firms, but I think the level of service is very high also and very individualized for smaller clients, which isn't any longer possible in bigger institutions because you need a certain size till you have your dedicated wealth manager and talk to the chief investment officer. For us, it's different as a smaller firm. So it's a little bit as the smaller épicerie against and the big hypermarket with all the advantages and disadvantages. And then the second part is asset management. We have asset management in our DNA because as these entrepreneurs, they come out of the private equity world, have been investing in real estate, private equity, real assets, ships, boats, planes, etc. And I've been trying to add the listed security side with my background. So we find we have quite an expertise in both listed and unlisted assets, also together with Whitestone, of course. And then there's this other that's called third-party management or asset servicing. That's from the name quite a strange animal, but it simply means that if a sponsor comes to us and he wants to set up a fund, we will help him in doing so, and we will, if he help him fulfilling all the regulatory requirements, risk management, compliance, etc. And do, of course, if the client desires, so do the portfolio management. So we can kind of white label the fund for the client, so we can distribute it wherever or sell it to his clients and focus on his clients. So, well, as you see here on this picture, the entrepreneurship is clearly, well, there are the shareholders are involved in the business. So you see here Sandro and myself tonight here presenting, so we are also shareholders in the business. That comes with a price, of course, for the entrepreneurs. We are not, we feel the P&L, the profit and loss of the company plainly. We have the responsibility of the families we have on our payroll, and it creates a certain, let's say, alignment of interest, which is, of course, it makes things closer and sometimes also more difficult. But certainly it creates this entrepreneurial outfit. So we can move, adapt quickly, but we also, of course, it's not automatic that the salary comes at the end of the month. I think if we are not moving, nothing happens and there's no income. Proximity that I mentioned already and the independence is simply due to the shareholding. Our clients also appreciate the fact that we are not now trying to fill their portfolios with our own products, and because we are smaller, we are boutique, so we have certain expertises, but we are not trying to have a product for every problem that the client has not even dreamt of yet. This is a split of our AUMs, our assets under management, but I will not go in detail, but as I mentioned, you have listed and unlisted assets. And I could not escape to add a little bit more about the European value strategy. So the listed side, to give you also an example, what we are doing on the listed side. So here our strategy we are following is a high conviction, long-term, flexible strategy. Basically, we are stock pickers, and we have always been. We pick individual stocks. I have a universe of more than 1,500 companies in Europe, and I'm selecting around 40. And they are being analyzed and then being put into the portfolio, and but all following what we call a value approach. So meaning that we look at undervalued businesses. We integrated, Mr. Colmant mentioned the ESG part of how important sustainable investment has become in these markets. This is also something which is very important for us. We have been signing this UNPRI, which is a kind of a charter, and a worldwide charter for, so we commit towards these standards, and when we look at individual companies, we also question them on this. For example, when we invested in a company, you may know Lafarge, which is a cement producer. There were also ESG points we wanted to clarify directly with the company. So we engage, we discuss. And then it's a niche market here on the listed side. I will not bore you too much with the track record. I'm doing this with for more than 10, 20 years now. It's already long. But these strategies can survive long term. I will not now go into the detail of our investment strategy, but if you have questions afterwards, we can discuss it, how we analyze a company. But now I'm moving to the real asset side, and here I give you also an impression of what types. These are real examples of companies or funds or assets we need to value in our portfolio, in our funds, and that can be planes, that can be real estate developments. Here's one you may know as students, the Kirch brand from the beer. There's a development where we were involved in real estate development. And then different type of ships, mainly linked to the oil services sector. But these are examples of what in real life you may be confronted with, and where you need to evaluate the value of the assets and the cash flows and analyze. Okay, this is more the sales pitch, but I'm not trying to sell you here tonight. While I'm always selling, but I'm just wanted to give you an example here of what we're doing and how we try to address our clients. And technology is definitely one more and more important point of what we are doing, and we need to make sure not to be up to the task there and have the highest standards and be efficient. I'm now coming back to the wealth management part, and I think what is and everything that was said before about regulation is indeed, in my opinion, very much correct. But the regulatory framework is the same for everyone. Initially, when we started in our companies, in our boutiques, we thought that the regulator would have a principle of proportionality, meaning that the bigger you became, the more constraints, regulatory constraints you get. Unfortunately, and there's a real level playing field to the extent that the regulatory requirements are the same, pretty much the same if you are a bank or a regulated bank and as we management company as we are. So we have many different procedures, processes, and to give you one anecdotal example, we have even a document retention policy, meaning that we need to have a policy on what we do, how we archive our documents. It's really, it has become an extremely regulated industry that creates barriers of entry, that raises also the break-even level. You need already many clients in order to be able to survive. So we are very happy to live in this industry, but it also shows that it's not all about regulation, because regulation is only the rules under which you operate, but that doesn't create business in itself. What creates the business is, in our opinion, the differentiators, and the differentiators come from your expertise, come from your unique selling points. For us, it's this entrepreneurial outfit, the fact that we do many things still in-house, that we try to understand what our clients want from us, and we go into a lot of detail there. So we partner up with our clients. We have, of course, for example, if somebody wants to launch a fund and he doesn't yet have 200 million as committed capital, he comes to a smaller player like we are in order to find also solution. While bigger banks would probably not like to see him immediately as a client. So there's a niche for everyone. And I think it's especially true for wealth management, where smaller companies can offer more tailor-made or very tailor-made solutions to their clients, because a lot is about client contact, relationship. So that was what the general part on the company. Sandro, do you want to add something?
Yes, thank you, Léon. I think that there is pressure on the markets, and it's becoming more and more difficult for the small asset manager to survive, because there is a pressure on the costs, on the regulatory costs. And so it means that we will certainly assist in the future in some consolidation operations, M&A transactions, because it's clear that today, if you manage only 100 or 200 million euro and you need 10 people to do it, it's not a profitable company. So it means that in the future, there will be certainly consolidation on the asset and wealth management markets. It will create opportunities, I think. In ECP, we have always considered that in every danger, there is an opportunity, and the crisis, even though the crisis is difficult, and I'm not totally agree with Bruno saying that he is more negative. I'm more positive and optimist. I think that we should be optimist and positive in this situation. Crisis is difficult, but crisis is also an opportunity to innovate. And so that's what we are trying to do within ECP. It's to innovate and to find new development ideas. Léon will explain that these ideas afterwards, these new products. But it's important that you consider in your cursus and in your career that in every danger there is an opportunity, and the crisis, after the crisis, there will be new things to do, to create, and you don't have to stay, I would say, without thinking about things when there is crisis. On the opposite, you should find new ideas during the crisis, because when the crisis will be terminated, you will be there with your idea and you'll be ready to develop it in a positive environment.
And I believe the the sentiment can change very, very quickly. We saw that during the COVID crisis. We saw that again with the US presidential elections. I think that the hope is always coming back. And we saw today was a very, and that's why we are also smiling tonight. It was a very good day in the stock markets. Why? Because Pfizer came out with results on a vaccine, on a study showing quite impressive results, and maybe there's now hope to have a first vaccine before the end of the year. So I strongly believe in the capacity of mankind to innovate and to find solutions also to problems. And I'm confident that we find also a solution to COVID. I'm saying this, well, okay, I'm not a veteran. I was not positive, but what I can say is that we adapt, we find solutions. I was 1 week now in self-quarantine because we had somebody near us who was, but I also noticed that it doesn't hinder you to do your work. And then now let's come back to COVID and also maybe give some of our experience in this. I would like to start by saying something. Actually, we recruited at the beginning of the year a new risk manager at ECP. And he happens to be Chinese. And before he started at ECP, he said, oh, now I go back to China and I visit my family. And then this whole thing broke out and he came back. We told him to stay 2 weeks at home before he came back, but it shows things changed so quickly that we all needed to adapt. And as we are a regulated industry, I think our regulator here in Luxembourg, CSSF, was also very quick to adapt and came out with all sorts of guidelines and regulations. For example, first reaction was to say, your employees should do as much homeworking as possible, as a guideline they published. Of course, this was going around the financial community immediately. And it was very hard, especially for smaller companies, then to say, you come to the office. However, I must admit that there was also a positive angle to it, because I think we implemented very quickly the rules, because from a labor law perspective, and that's not only an hypothetical, it's our responsibilities as employers to make sure that that there is all the the distancing measures, social distancing measures are being respected. For example, that there are enough disinfectants, that there are masks. Fortunately enough, as we work together with Lux Aviation, we immediately had many masks coming from China. So we could, but I think it was a challenge for the company, also IT ones. And it also created issues, because you suddenly had all these employees working from home, talking from clients from home, maybe printing on the house printer account statements out from their clients. So we needed a whole new set of procedures in order to make sure that we would maintain our regulatory standards. And now we have a kind of a COVID officer. So we work remotely and we go into the office to do our meetings, if we have meetings. And I must admit, it works pretty fine. We learned to use Zoom. There was a big discussion on Zoom initially about confidentiality, but I think it has evolved. It has become kind of standard. But I think we try to adapt.
I think that, just if I can add something, Léon, it's clear that the COVID crisis, it's a good crash test for a company, because it's a way to test all the procedure, all the operational procedures. But on the commercial side, it's clearly more difficult to see your clients. And because some clients are fear, the current environment induces anxiety. So it's clear that even though it's difficult to develop the business on this environment, you should always to keep contact with your clients, because it's important. And how to keep clients, it's by taking your phone once a month, twice a month, I don't know. You phone your clients, you explain them what's happening on the markets, you send them an email. So you have always to keep contact with your clients, because in this current environment, some people tend to be close their office and to stay in their office. It's clear that you have no choice, but you have also to see perhaps and to re-engineer the way we approach the clients, because if this crisis can still last 6 months more, we can't stay without having any contact with the clients. So we have also to be innovative on the commercial side to develop the company, because a company which is not developing, it's quite a company which is dying. So it's important always to think about that.
So is your presentation done, or?
Yeah. Well, we.
Yes. Okay. So thank you for your presentation, and then now I will give the opportunity to the participant to ask questions if they have any to you.
If I can add something, react to.
Yes, of course.
I think that you should always, as Léon explained you in the beginning of this presentation, you should be passionate by your ideas and by what you want to do. I had no linear career. I just had the chance to work with brilliant colleagues. And I think that when you work with brilliant colleagues and with a brilliant team, you become also brilliant yourself. I like this event, this way of working, because there is always more to learn from the others, and you can grow. You cannot grow alone. You need the others, but you just have the chance to make part of a good team. If you take only Lionel Messi in the Barcelona team, it's a very good player. It's a magic guy, but alone Messi can't win a game, even though he's brilliant. So when you have this chance to make part of this team, it's a wonderful experience for you, and you will learn a lot and you will grow, and it's important. As far as we are concerned, when we start to create a small asset manager, which is Whitestone, when we decided to do that, a lot of people to whom we explained the project said, "You are crazy to do that. You are living in a quite competitive industry. There is no place for small players. It's not to do, etc." I think that we had the courage to do it, and even though we didn't know at the beginning if we will succeed, it was not important. The most important is to have faith in what you are doing, and when you have faith in what you are doing, you will succeed. Because when you are entrepreneurs, you have good ideas and you believe in it, the people in front of you will feel this, and if people feel this, it gives you a chance to succeed.
The first asset manager I founded, that was, the timing was great actually. I resigned from Nordea in August 2007. And then we founded the company to be ready on the 1st of January 2008. We were active on IKEA's desk and entering the financial crisis in year 1 of our new venture. And I must say that still, I believe I would happily do it again. Because the jump is, of course, into entrepreneurship is not easy. But I think it's very rewarding. And there will be failures. There will definitely be failures. But I think overall, I find such a career path very, very more exciting and rewarding for me as an individual than anything else. So I'm very happy of where I am, so. But it's about passion. It's about what you really want to achieve.
Of course, and I can only agree with what you have said. And it reminds me a quote that says, if you're not doing what you like, you're wasting your time. So to all our attendees, do what you like. Do what you're passionate about. For instance, me, I'm passionate about finance. And that is the reason why I have joined Capitan, for instance, to deepen my knowledge and to have the opportunity to meet people like Sandro and Léon that are here today, and also have the opportunity to organize some events like this one. So yeah, go ahead, just do what you like.
Exactly.
That's the word.
Do what you like and learn every day. It's important.
Learn every day, and of course they have learned today. They will sleep smarter today.
Because you will be sometimes in some situations, sorry, where you don't know how to do because there is no mode d'emploi. So you will have to analyze the situation and to find new solution to tackle this problem. And this is the exciting part of the job, because when you begin from something which has to be created, it's very rich because you have to exchange with the team. Everybody can bring his experience, but as Bruno told today, the past experience are not always the solution of today's or in the future. You have to always to be innovative.
Definitely. So I think there is a question. Yeah, go ahead and ask your question.
Hello, my name is Daria. I'm from the Solvay Brussels School, and I wanted to ask you, so you are a relatively small company in the financial world as you have 50 employees, and I wanted to ask you, how did you manage to attract clients, especially after the financial crisis when you started?
Well, to give you a good answer on that is that I think the first source of clients is, of course, the network we built over the years. We may be smaller companies, but I think over the years as investment professionals, we have tried to build networks. And by trying to have the right products, we go out and show them. And that's what Sandro would call to take the bâton de pèlerin. I don't know the English translation, but to go from door to door and sell. And then it's really, sometimes the opportunities come from corners you would not have expected. We have, of course, a distribution strategy, and it's not all tactics, huh? But I think it's definitely not as easy. But for example, something I personally did, I write every Friday a Friday morning coffee on investing. I publish on LinkedIn, etc. You can. If you are interested, you can definitely have a look. But now I'm at number 100, almost 130 or so. So it's really trying to bring something relevant to the community, and by this expanding the network. And there, I believe technology has helped smaller companies a lot. And this goes now for all the partners who are very senior, I believe, people in the industry who have networks. But of course, there are no big marketing machines, marketing budgets, and you will not see us with a plane and a flag behind with ECP flying over Brussels. That will not happen.
Hello, Daria. Sandro speaking. Just if I can add something too, I think that every people within the company is a potential seller of investment solution proposed by the company. So we are all within the company kind of ambassador of what we are doing. We don't like to do advertisement for advertisement, because we think that selling finance products and advertising is not always good, compatible, I would say. And we prefer to be conservative on that way. But I think that our best prospects are our clients, are our current clients. If our current clients are happy, they will speak about us to other people, to other friends, and so on. So we have kind of a strategy to develop from friends and families, friends of friends, and so on, making very, very few advertisements, even though we use some digital means to do it. And I think that we are more focused on proximity and on contact with clients. We are not really trying to battle against big actors like private banks and so on, because we don't want to play on that game. I think that everybody can have his place, but you should not have battles against big players. You should stay on your niche. And our niche is, I would say, clients, private clients who needs a customized service that we can do. Institutional clients who are interested in value investing strategies. So we try to be different with respect to the other actors, because it's clear that we evolve in an industry which is becoming a commodity, it's clear. And so for active asset manager or wealth manager, you should be really different from the others, because there is the passive management development assets like trackers, like ETF and so on, which tend to be more and more important in the asset allocation. And so it's clear that a lot of asset manager or wealth manager in the future will disappear. Why? Because they became commodities. And so to have a kind of firewall to survive in our industry, like ECP, we should be different and to propose things that others not propose.
Thank you, sir. It's very inspiring.
Thank you. Welcome.
So is there any other questions? Don't be shy, guy. Don't bite.
No, I have already.
Okay, Vincentia, go ahead.
Yes, good evening, sir. Regarding to stay in your industry, do you have like a competitive advantage that can differentiate ECP from others? Thank you.
It's a good question.
Yeah. I think one of the characteristics of our industry is that every boutique and every even institutional player will tell you we have a huge competitive advantage. It's not enough ourselves to be convinced of our competitive advantage, but I believe we have some. And the first one is linked to our DNA. We are an entrepreneurial firm which was born out of the needs of entrepreneurs. So it was not a fabrication of on a design board of a financier who thought what could be interesting for potential clients. It was actually reverse engineering. It was what these entrepreneurs needed. And then it's much easier to open that expertise to the outside, so outside this circle of entrepreneurs, than to stay to do it the other way around and first design a product you think could be interesting for the outside. And then when it comes to the asset management part, I think the differentiators can be on different angles. One differentiator we have is, for example, in value management, we have I have as a manager, an extremely long track record. So we live in an environment for financial markets where everybody is driven by short-term needs, and you have new products being launched all the time. But here you have a manager who has been around for more than 20 years and who has applied his investment philosophy. It was sometimes out of favor. After the financial crisis, it's certainly value investing has been out of favor, but still we have been consistently applying it. And I think the industry knows that we are there, and well, at least the feedback we are getting. So I believe that's another differentiator, is the fact to being consistent and having been there for quite long. And then the last differentiator is that I think not every client is institutional. And the clients also need tailor-made design solutions. And they need the right persons on the other side who operate in an environment which is small enough where they have the time to find solutions for their clients. And I think that's a very valuable asset. The time I spent during the COVID crisis, when the financial market crashed, during here in my home office, explaining to investors why and how we were positioning our product was quite valuable, because I heard afterwards that probably the reaction time of larger institutions till they contacted their clients was much longer. And so these are the things we are working on. It's of course not a tangible product we are selling. It's not like a baker doing the best bread in town and therefore getting the clients. So the differentiating factors are more of this type I was just mentioning.
Hello, Vincentia. Sandro speaking.
Yes.
What I can say, which I find important, is to be agile and flexible. It means that when you are a small company, your decision making process is shorter. So it means that if you understand very well the current environment in which you are, you can take important decisions with a direct impact and visible impact on what you are doing. And that's also the advantage working for a smaller company, is that you really see directly the effects of the decision you take. As far as we are concerned, we use, I would say, this crisis period to create new investment solutions, and also to be open on the artificial intelligence approach to manage also our funds and our policies, investment policies. It doesn't mean that we will replace the fund manager or the portfolio manager of ECP by robots, no. But we are aware that we should always also use this new technology to support the decision-making process. And it's important that, as I told it before, if you are agile and you are open, you can be innovative and you can create things rapidly and to prepare the future of a company, because each company has to be reinvented at the moment. If you do not reinvent a company, after 7 or 8 years, the business model will begin to die. And everybody has the same issue. If you took Apple in the past, it was the same. The GAFA, each company, Exxon, each company has to be innovative at the moment to prepare the next 10 years, 20 years of their life. And it's always the same. And each company has the common, I would say the common, I would not say problem, the common challenge, because it's a challenge to reinvent you when the cycle should be terminated.
Thank you for your explanation. And I also agree upon your opinion about the to communicate the AI technology to your employees so that they can be partners instead of compete against each other.
Yes, indeed.
Yeah.
Indeed.
Thank you.
Thank you. You're welcome.
So I have a question myself.
You
talked about using artificial intelligence, and it reminds me that BlackRock also use artificial intelligence to make them to help them take decision. Like if my mind is right, this artificial intelligence is called Aladdin. I guess you heard about it.
Yeah.
Is that this kind of artificial intelligence that you're using?
Well, we are at the beginning of the journey. And one thing about Aladdin, actually, interestingly enough, one of our colleagues, she worked previously for BlackRock, and we also had discussions on Aladdin. Of course, one thing is sure. ECP is probably one of the smallest asset managers in Luxembourg, and with 630 million roughly, it's already good, but it's not the biggest one. But in the same building where we are, we also, BlackRock has an office, so the largest asset manager in the world. The budgets they allocate to artificial intelligence are, of course, a multiple of what we can do. However, I would claim that a smaller, dynamic company who is able to adjust and learn quickly can also move certain things and quite quickly integrate these factors. For example, when we discuss now in artificial intelligence, machine learning, etc. But another example is ESG. We compared a little bit on the market what we are doing for these sustainable investments compared to what other bigger houses are doing. And I can tell you that my own humble conclusion is that we certainly do not need to hide behind bigger houses because we are small enough to really absorb these principles deeper into the company. So that compensates partly the different capex levels in these companies. Because it's not all, it's all about brain power. It's not about computing power or less about this. But of course, we don't have, like BlackRock, they must have an army of software developers, PhDs to work on these matters. We don't. However, we can already do a lot with what we know.
What I can say, Briac, is that we have made an agreement with a company in Belgium to develop an artificial intelligence approach for ECP. So a kind of customized principle to help ECP in the decision-making process. So we made this partnership, I think it's 1.5 months ago. So it's very recent, the approach. But we are aware that it's necessary to incorporate this kind of deep learning into our analysis. It doesn't mean, sorry, that robotics will be better than human manager in the future. But today, you have to consider this deep learning approach to make your stock picking. So it's important. I would say it's a decision-making process tool. And just for the anecdote, 20 years ago, I was like you at school in Solvay, and I was doing my thesis with Hugues Bersini. It was about data mining and data warehouse 20 years ago.
You were ahead of your time.
Yes. And it's incredible because when I made this thesis, it was quite not an easy topic, I would say, because I was also employed by Fortis at this period to develop a credit scoring approach using these data mining tools, etc. And finally, my thesis was good, and I was happy with the quotes. And Hugues Bersini told me at this period, you should go on in this field because it's the future is there. But it was 20 years ago. And it's clear that artificial intelligence is not a new concept. It has more than 20 years. But it's clear that with the technologies, with the capacities of the computer, the servers, and so on, we are now able to, I would say, to manage billions of data. And thanks to that, we can do interesting things.
Of course. Léon was talking about the fact that maybe employees should not be afraid to be replaced by this kind of artificial intelligence. But you just said that they can analyze billions of informations. It can be kind of a competition with those employees, don't you think?
I don't think that it's a competition, because I believe the moment, I see it more as a tool to automate certain tasks and to make them scalable. But you still need the owner of the machine behind. I give you and the designer of the machine behind. So in our company, I don't believe we have now employees who do automated jobs, who do the same job every day, who repetitive tasks. These have already been partly automated. I give you on the asset management side one example. We designed internally a screening tool to look for certain qualities of a company. And from there, we build a quality score on every company. It uses, in our universe, it uses around 20 quality factors underneath. You cannot do that in an Excel spreadsheet so easily, so you need to automate it. But now the analysts have much more time looking at what comes out of these scores than screening and going through long listings of data, and it makes them better. When I started in the industry, we still had, for the US stock market, we had something we called value line. It was like a phone book, and you had a one-pager by company. So you had IBM, you had a graph, and then you had the PE ratio, the turnover, the net profit, etc. And you went through that book by hand. It was not even a CD yet. And but the world has evolved. Does it mean that the principles you are applying when analyzing a company have changed? I don't think so. The fact that ultimately what matters is the mode of the business, the cash flows it generated, the valuation has not changed. But what has changed is certainly our capacity to look at, to analyze bigger amounts of data. And there it's not a replacement, it's basically the mankind moving up the ladder, the financial analyst, and the machine doing a lot of more of the gardening or the more basic work.
Okay, thank you very much.
You're welcome.
Is there any other questions? So I guess no. So I wanted to thank you for this evening and for this presentation. And I also want to thank all the attendees for being there. I hope you have learned a lot of things today. So yeah. Go ahead.
So I just want to thank you and to congratulate you for this very nice association, I would say. I didn't know it before. I've been in your website and I found it very, very interesting, very professional. So I want to thank you for this very, very nice and very good initiative. If I would have been student at your time, I would certainly make part of this because it's a very good initiative, and I think we miss it when we were students at the moment. But fortunately, the new students are more brilliant than the previous ones. So
thank you.
I'm very happy with this, and I can also say you that we within ECP and Whitestone, we like to have trainees in our company because we as I would say as seniors, I would say now, even though we are not so old, but we like to share our experience to the youngest colleague, and it's all I think it's all I would say it's an obligation to do that for the young generation to receive, for us to give, sorry, it's an obligation for us to give, to share our knowledge with the young generation. And I think there's a lot of things to know about the young generation and people like us, because it's for us working with younger colleagues makes new waves, new ideas, new interesting topics perhaps we didn't see at the moment. And for the youngest colleague, it's interesting to share the experience of the others. So this is our ESG approach within ECP and Whitestone, to have the possibility to hire trainees when we found trainees interested in our company or in our ideas, etc. And so I want to thank Léon to give this opportunity to within the company to do, because it's very important for both parties to do that.
Thank you very much. I take this as an invitation, and maybe we can talk about this later on. And at Captain, we have a very brilliant student that can be helpful for you as well. That's what we are doing with our other partners. So